All right, good afternoon. The market closed like 20 minutes ago, and welcome to the end of the review for today. And today is the Wednesday, the midweek day right there. So basically, we have Q1, Q2, Q3, and Q4. So we see the Monday is down, Tuesday down, and Wednesday down. Let's see if the Thursday gonna be reversal. By the way, we are is April 17, 2024. Wednesday today. And we are in week 16. So basically, we are we are the third week right here of the second quarter. Very interesting. And this week we have option expiration day, so expect a lot of volatiles. But so far this week we see the sell-off is start and intensify. Right, if we look at the weekly candle right here, so the last 2 weeks we can see that it's sell off. The SA indicator right here is just a simple moving average right there, and we'll just 20-day. So that's one of indicator. If it fall off 20-day, it's gonna be bearish. But so far for the weekly, it's still above 20. So there the last 2 weeks start in the start of Q2, quarter 2 of this year, it starts sell off. Beautiful night right there. But if we look at the daily, yeah, we can see that the bearish already start show up. So on the daily, you see it break down the 20-day moving average right there. Break it out, and then it's a curve manipulation right here, and then break it out, manipulation, and then huge right here. So on Monday, not Monday, excuses, it's on Friday, and then Monday is the follow through, and we missed that move right there because I have a Judah swing set up. We mixed that. One thing we want to bring to our attention real quick is we got it the other day. I mean, 2 weeks ago we saw that, but we don't know how to entry them. That's the issue. But we can't figure out now. You see that? So in terms of the daily time frame, we have a smart money diversion, or another word for smart money technique. So the diversion check taking place on April 1st, which is the first Monday of April, or the first Monday of the second quarter right there. So basically the ES make a higher high, but the NQ make a lower high. See that? and we mark out the breakout level right there. It retests that. For the ES, we do see that it break down with a family gap and it's break it back up again with family gap. So it's right there. And then you see it break it down with a family gap also. Gap down, gap up, gap down, and then retest. Boom, going down. And right it out went down on that day. It revert back. So it's very hard for to check a position. I mean, the market move very efficiently right there. So right here, it rebalance right away. You see that? And then it make a two signal candle right here. Pretty much we understand now, you know, a couple days ago we don't, or a couple of weeks ago we don't understand. But whenever you see that it's break out the level and the following candle close above that, that means that it tried to induce the people who want to go long or people follow so-called follow a trend or breakout trade right there. But that exactly moment, exactly the moment that it goes to the opposite direction. We see that right here at the level of 52, 53. We see that, right? And that's what we thought also when a novice trade like us. We have no clue that this signature is get ready. Basically, it trapped the sell side liquidity in order to make a move that go to the opposing direction, go to the opposite direction. We see that movie so many times, and now it's become our second nature to recognize that. That's the beautiful thing right there. That's the whole idea of practice. We have to leave ourselves room to make error practice. But if we're afraid to make mistake, make error, we're not gonna learn anything. So that's the whole idea right there. And you see how it moved beautifully. And you see that the Friday is a giant displacement. Yeah, it's the giant displacement. It break out, it break out this level. And this level, just two level. This guy also break two level, this level and this level. So what the next movie for us right here? We have no clue when the next day, which is today. But now we can understand that after displacement, here's what we learn. But before we go further, let's stick to the pattern right here. When you see the breakout and its retracement above that level, that the short setup. Let's look at at the 50-minute chart today. You see, let's treat this as a breakout level. You see the huge candle move up. We thought I'm gonna get breakout, but look, two candle open and close above that. That set up the sell side grid right there. And you know what? We did go in and go long. And that's exactly the moment the market show up right there. We did make a mistake on this. And that's where we learned. We said, wow, we have a key level around here, right? In this case, a 51, 1350. Where that level come from? Right here. Yeah, That's the breakout level right there. You see that level is the key level from the prior day. But if you look at the candle, then we can do the previous high right here, or intermediate term high, whatever name right here. But it's very close to this level, right? 54, 14. So that's around there. If we mark this level, we can still see the pattern. Basically, this morning we were manipulated by this huge up candle at 9. We thought I'm gonna break out, but we make mistake. We see the pattern now. Whenever we see the breakout, and then we see two candle that open above that, and then we go short them. Especially if it break the buy side area. Yeah, that's the mistake we make. Let's see, what do we have? Yeah, I think we do have. Oh. The same idea from yesterday. You see that? Yesterday the same. We should short, but we go long. The same idea. See that? It break out. That's the same idea right there. Yeah, let's see if we have any gap down. Yeah, we have a gap down. Not really. Yeah, maybe right here. Gap down right here. Gap down and then it gap up. Boom, going down. All right, so that's an idea. Before we go in today, we don't have any bias. Well, we look at the ICT profile. Basically for this week, we don't see, maybe Wednesday is the week low, but the Tuesday also the low. It will match perfectly if the Tuesday is low, Wednesday low, but it didn't match the ICT weekly profile. We see the setup right here, but we're not sure the swing high. Before Euro swing before 9:30. Yeah, if the displacement let's look to see if that's the case right here. We do have it, the Euro swing right here. You see at 2 o'clock, wow, perfect. We do have a Euro swing at 5 right there, and we have Euro swing. Check out the London right there. It would be nice if we see the consolidation. But in this case, it's no consolidation, but it still provide a decent setup. So this is the London. You see is rate 1 and rate 1 more time, boom, going down. So the model right here, this model 2.1 can be applied, but we're not sure, so that's reason why we don't trade short. We will try to go long. That's our mistake we make right there. Yeah, let's see what else we did for today that we can learn. Okay, we did make we did make mistake when we try to go along here. We thought we're gonna break out. That is the mistake. Okay, one thing right here we learned right here. It's a beautiful setup, and we are mix that because we think something differently. Okay, so we have the 1 hour time frame on our left, on the left hand, and 15 minutes on the right hand. And you see the risk reward ratio is beautifully. You see that we reached 3.32, and we're gonna gain 50. And the idea is very simple. We have 4 breakout. Instead of real breakout, gonna be 4 breakout. At the level that we are mentioned before, which is basically right here we have a Q1. See that? The Q1. And then Q2 is manipulation. It happened perfectly. You know, sometimes we cannot expect the setup show up every day. But when it does show up, it matches perfectly the model that we're looking for, which is AMDX, accumulation, manipulation, and distribution. X can be C, which is continuation, or R, reversal. So in this case, we see that here's the accumulation, here's the manipulation, and then distribution on the Q3 right here, and Q4 is just continuation, beautifully until you finish Q4 right there. So we can exit out at the finish of Q4 perfectly. See that? And on the high time frame, the candle at 9, we see the key level right there at at 51.13 or even at 51.08. You see the candle open above that. The candle right here at 9 at 8 close above that, but the candle at 7 close below that. So this one is just a trap, and then boom, it show off right there. So the whole idea that you see that the breakout level, the whole idea, right? Breakout with a candle, thought that it's gonna be breakout, but actually is it's not a breakout. That's the 4 breakout. And you see that it should sweep the buy side wave going down. You see sweep the buy side. You see that there? It's with the buy side. So the candle at 9, the purpose is just it open below the key level right here, and it just sweep the sell side. So the whole idea is that the high time frame 1 hour is close below the key level 51.13, and the run up right here on the low time frame is just for liquidity sweep, not for liquidity run. Basically, it's not going to be a real breakout. It's just for breakout. That's how it manifests itself in the low time frame right there. It's a high time frame, that's a low time frame right there. So our mistake that we just going and go along because we are so unexperienced, you know, when we see the huge up close candle, and we thought this is just a retracement before breaking out, but it did not happen. And look at how precise it happened. As soon as the breakout, you see the next candle open below that, but it did sweep the buy side liquidity and then close below the close of this one. This candle the same, close below and then retest all the way here, and this is where it dropped. A lot of people go long, including us. We thought that wow, it's rejection, so hey, let's go long because it refused to go down. But that's where exactly the moment it flushed it down, because it tries to trap all the sell side liquidity. The same pattern with the other chart we see right there. You see the breakout level, it break it out and then it looked like wow, it's gonna be breakout. Look at the other look at the daily time frame, the same pattern is play out. You see that? This breakout level, you see it's close above, well, it closed down. This one respond very fast without it make us into thinking that wow, it's gonna be break out this level, and it put in two candle open and close, open and close above this level, and you see a huge wick right there, and that make us into thinking that the market is going long. And exactly at that moment, it flushed down. You see that? Flushed down. Beautifully. But if we make that, we still have a second chance right there. This guy opened below that and retest that. Man, look at that. The 11. And then look at this. So that's the whole idea right there. Breakout or full breakout. So we kind of understand the signature right there, so that we have reading the move of the markets better. So that's our job, try to be better every day. Just label it. Don't try to get ahead of ourselves. Don't try to rush the process. It's a long process. We're not gonna get success overnight. Our success is built on failure. We have to start with a failure first. We have to start with a premises that we are a terrible trader, and we are work our way up to improve ourselves every day. That's the mindset that we need to have. Not the mindset that we try to make profits quick. No, it's a long process. I think someone say that, I think Albert Einstein is a physicist. He said, not because I'm smart, but because I spend time long enough with the problem. The same principle right here. Maybe when we start out, we feel very frustrated, right? We feel very confusion because the market movement really confuses. We don't know when we need to get in and when we need to get out, and when we will try to, when we should let the winner run, and or we just need to take quick profits. So that's a lot of question right there. But all of this it will be resolved by time. It's not gonna happen overnight. That's the nature of the game. So we are here for the long run, and that's what we're doing. And we have to love the process, love what we're doing. So that's right here. Go back to this setup. Look carefully. We see that this is a liquidity sweep. It's not gonna run up. It's a sweep buy side liquidity before it's going down. So we can put our buy stop at this candle, at the high of the Q1 right there. So as soon as it breaks down, we have a huge range right there, 1 to 15 reachable ratio. And we look at the candle 9:15 right here. It opened and closed below the close of the 9:30. That's what we traced at 9:30 right here. But it does sweep the liquidity, so that's the whole idea right there. And what else we learned for today? And we do have a trade reversal right here. So we put a 4 breakout right here. You see the risk reward is very decent, 1 to 4. You know, you get 4 point risk, you get 16 points, 1 to 4 right there. So basically we see this phenomenon also happen as soon as you see a solid candle down close or up close with not much wish break a level, a low, pre-break lows, and you see the gap create right there, and you see the next candle is open above the close, right, and retest the level. It looks like gonna fail, but it's not. Especially it rate the buy side, then sell side, then we know that we can go long. We put a buy stop right here at this level, and we check M for this level 58.78, 50.78 right there, and it did hit that target. You see, it hit the target right there. So only 3 candle we hit our target. Yeah, right here at 50.75. Sorry, 75, not 78. This is the bearish breaker. Yeah, right here. Yes, the 75, not 78. So basically, we see a clear down close candle breaking the level. That's the very big trade book. And the candle at 12:40 open above the close. You see, open above the close of this candle. And it swept the sell side, and also it formed a fair value gap. Put buy stop right away, and ready for target. So in this case, it's gonna be a quick move. We're not gonna let we're not gonna let the winner run, because so far right here is a huge down move. It's not gonna reverse, right away. So we're not gonna let it the winner run. And another thing we observe right here, we have another setup. Right here, we make a mistake. Right after we missed that move, we saw the move, but we don't take the trade. So after that move, we going right here because we believe that this is just a retracement. So we put a for 0.75 right here, which is at the level that it hit right here, right, and then it retraced. So we put a buy stop at that level, and we got into the trade. But you know what? We get greedy after we see the huge candle. We got greedy. We move our target, and we pay heavily. You see, it retrace back. So we make mistake by moving the target beyond the daily open. We should target at the daily open right there, which is today, Wednesday open right there at 50.96.25 right there. It hit exactly. So that's our mistake. But you know what? That's the beautiful mistake, so we can learn. Make a greedy so we move our stop loss. So this is also a beautiful setup for a trader. So we do have a chance to go long for a sell up there also. And what I will learn. Okay, right here we also we got the idea right here. We see the photograph. This is a breakout level, photograph down and follow up rebalance. So right here we put a buy stop right here because that's the photograph. So when it pull back, we put in the order at 15, but we got refill on the next candle. You will see right here. So we got refill on this candle. Is that right? No, not this one. At 15. Yeah, so we got refill in this candle. We thought that it's gonna go up, but it did not. So at this candle, it at first is a up close and then it flips down close. We get out right away. So we are break even on that trade. It's very we really want to see it play out, but it did not play out this time. And another thing we learned is that right here, the concept right here. So after a huge displacement on Monday, so this one Monday, it break out 2 key level, right? Which is this level 51.49 and then 51.23. We save, and from what we learned today, it's safe to go short on the following day, which is Tuesday or Wednesday. If it open at 9:30, it's above the daily open, and the target is daily open. So that's the whole idea right here. You see that the 9:30 open is above the daily open right here. So because of the bias, we inverse from the daily, we can short them, and we can target right there. So we can have right there, or we can let it run. So that's another observation that we see right there. All right, let's watch the recording so we can learn a little bit better than just the charts only. Then we can wrap up right here. Okay, here's we replace the recording. Let me get right here. That's the volume. Okay, right here. That rewind them. You see. So when we see the huge candle right there at 9, and this is 9:15, we thought gonna be a breakout, and that's just a pullback. Look. Okay, pullback, right? Look, the 9:30. Wow, look at 9:30. It happened too fast. See that? The 9:30 right there. So we thought that it rejected at the 51 right here. We thought that, oh, we're gonna go long. But that's a mistake. That's exactly the moment we need to put a sell stop right here. And look at it move. Wow. You see right there? And look at the 945. You see, it flipped at the 945. You see, we thought that, wow, it's gonna be pulled back, and you see Fibonacci retest, so it's gonna go long. That's what our thought at that moment, but we forgot the idea that all of this is just trap the sell side liquidity. You see this candle gonna flip. You see up close right there, and then boom. And we paid the price for that. So we should put a sell stop right here instead of try to go long. You see, here's 45, and then you see the follow up at 10. And right here it's too late. And you know what? We tried to go long right here also. It was just crazy. We make mistake. Because we try to catch the fallen knife. Yeah, you see that? Well, right here we thought, wow, it hit into, short area, so it's gonna rebound from there, but it's not. Exactly that moment it flipped. You see that candle flip? Oh, that candle also. You see that? We thought, wow, but it flipped again. Let me see that. Scary. It flipped again. Wow, you see this candle break 2 levels, so it's safe to short them. But this candle is a long wick right there. See that? There. And at 13, 12. So if we go short, perfect, go get out at 12 right there, and where it start a Q1 on the PM right there. And you start to see it's short sweep right here. See that? Yeah. Okay. So you see this level, let's this close with a very solid down close. Yes, you see that? Then we can put our buy stop right here. Hit that and a candle right there. And we should aim for the open. You see, it hit the open right there. When we go long right here, we aim for the open exactly. And you see, we get greedy. We don't know, but now we know. See, flip right away. Look, see that? Flip right away. Wow. Give back all out again right there. And we try to go long right here because the setup we already discussed is balanced price range retest right here. Right? I think we did balance price range retest. Where is our balance price range retest? I think we did say that. At 15. Okay. Yeah, here's the balance break range right there. Balance break range retest. You see right there? Yeah, we did going, but it's a break even trade for us. Because if we put yeah, you see, we go back. So we break even right here. We get out because this candle get flip right there. Yep, that's it. All right, thank you. We wrap up here. Thank you for your time and interest. We always grateful for this opportunity. We do what we love, and success coming to our way. Bye for now and have a great evening.